South Korea is now legally required to reconsider its planned crypto tax after a national petition cleared the 50,000 signature threshold in just 8 days. The petition calls for either the complete removal of the tax or a significant revision of its framework. The Finance and Economic Planning Committee must now formally review the objections raised by the petitioners, which could delay or even cancel the tax's implementation. Originally scheduled to take effect in 2021, the tax has been pushed back multiple times due to industry resistance and public concern. It is now set for January 2027, but this petition could disrupt that timeline. The tax itself is a 22% levy on crypto investment gains, a rate that petitioners argue is disproportionately high compared to other asset classes. For example, stock investors in South Korea are only taxed on gains above 50 million won, a much more lenient threshold than what crypto investors would face. Petition supporters argue that this disparity undermines Korea's ability to remain competitive in the global crypto market and could drive investors toward jurisdictions with more favorable tax policies. The petition's rapid success reflects a growing public and industry pushback against the tax. The petition. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Crossed 50,000 signatures on May 22, 2026, and has already surpassed 52,000. This is a significant threshold in South Korean law, as any petition reaching that number must be formally considered by the relevant legislative body. The Finance and Economic Planning Committee now has the responsibility to evaluate the objections and determine whether the tax should be modified or scrapped entirely. The tax has been a point of contention for years. Originally scheduled for 2021, it was delayed to 2023, then pushed to 2025, and finally to 2027. Each delay came after significant industry backlash, and the tax has never been implemented. The current petition adds renewed pressure to an already uncertain timeline. The decline in South Korea's crypto market is also fueling concerns about the tax's impact. Data shows that the total value of crypto held by South Koreans dropped from 121.8 trillion won, $83.3 billion, in January 2025 to 60.6 trillion won, $41.4 billion, in February 2026. Daily trading volumes on the 5 largest exchanges, Upbit, Bithum, Koinon, Corbit, and Gapax, have also declined sharply, falling from $11.6 billion in December 2025 to levels that suggest a cooling market. Some analysts suggest that the tax's looming presence has contributed to this decline, as investors may be moving assets out of Korea or into more tax-friendly markets. The petition's success is a clear signal that public sentiment is shifting. With over 52,000 signatures and counting, the petition has captured the attention of lawmakers and industry stakeholders alike. The Finance Committee's response will be closely watched, as it could determine whether the tax is implemented at all or if South Korea will take a more investor-friendly approach to crypto regulation. If the committee decides to revise the tax, the changes could include adjusting the tax rate, introducing a higher threshold. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For taxation, or even eliminating the tax altogether. The outcome of this review will have a direct impact on the country's crypto market and investor confidence. The next key signal to watch is the Finance Committee's formal response to the petition. If the committee agrees to revise the tax framework, it could open the door to a more balanced regulatory environment. If not, the tax may proceed as planned in January 2027. In either case, the petition has already forced a reevaluation of the policy and highlighted the growing influence of public opinion in shaping crypto regulation in South Korea.